Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moves of big companies and sometimes their crypto-related ventures. This quarter from Bitcoin Depot Inc. is quite the ride, full of growth sales and some serious legal battles. So, what is the big story here? Bitcoin Depot, the company behind North America's biggest network of Bitcoin ATMs or BTMs, dropped their latest report for the quarter ending the 30th of September this year. And like a Bitcoin transaction on a busy network, it has got its ups and downs. They are also rolling out new products and facing some pretty significant lawsuits. First off, let's dive into the numbers. They are seeing some solid growth in revenue, which is always a good sign. For the 3 months ending the 30th of September 2025, their revenue hit $162.5 million. That is a jump of about 20% compared to the same time last year. Now, if we look at the bigger picture for the first 9 months of the year, their revenue reached nearly $500 million. That is about a 14% increase from last year. So sales are definitely moving. But what about the costs to make those sales happen? Their cost of revenue, which is basically the direct cost of selling Bitcoin, also went up. For the same 3-month period, it increased by about 17% to over $132 million. For the 9-month period, those costs rose about 8.6% to over $402 million. This means while they are selling more, it is costing them more to do so. A big chunk of this cost is actually tied to the price of Bitcoin itself, plus expenses like rent for kiosk locations and armored truck fees to handle all that cash. Now here is where it gets interesting. Their income from operations actually leaped up by a massive 115% for the third quarter, from about $5.5 million last year to almost $11.8 million this year. Looking at the 9-month period, that figure is even more dramatic, jumping by over 228% to over $45 million. This suggests they are becoming more efficient at managing their costs relative to their sales, or perhaps their pricing strategy is paying off. All of this translated into a significant increase in net income. For the third quarter, it jumped by almost 139% to about $5.5 million. And for the 9-month period, their net income soared from just $2.4 million last year to nearly $30 million this year. That's a truly phenomenal improvement, but it's not all clear skies. Let's look at their debt. As of the 30th of September this year, their total notes payable, which is essentially their debt, rose to over $67 million, with a significant portion of that being long-term debt. This is a big increase from the end of last year when it was around $55 million, and they have some hefty payments coming up in the next few years. On the brighter side, their cash position has also significantly improved. At the end of September, they had almost $60 million in cash and cash equivalents. That is a big jump from about $29 million at the end of last year. This strong cash position is crucial for a company in a fast-moving industry like crypto. Now, for the part everyone wants to know, how are they really doing? They share these things called adjusted gross profit and adjusted EBITDA. These are not standard accounting terms. They are what the company thinks best shows their performance. Their adjusted gross profit margin showed a good increase, reaching 18.5% in the third quarter this year, up from 16.6% last year. This indicates they are becoming more profitable on each sale. For the 9-month period, that margin hit 19.2% compared to 15.1% last year. That is a solid gain. Even better, their adjusted EBITDA margin, which is a measure of their operating profitability, improved to 9.9% in the third quarter, up from 6.8% last year. For the 9-month period, it was 11% this year compared to 6.1% last year. This shows they are making significantly more profit from their core operations, but it is not all sunshine and rainbows. This report also highlights some major risks and legal entanglements. They are facing a significant lawsuit from Canaccord Genuity Corp, a Canadian financial services firm. Canaccord is claiming around $23 million in damages for allegedly breaching a contract related to past advisory services. Bitcoin Depot is fighting this lawsuit vigorously, but the potential financial impact is substantial. Then there is the Attorney General of the state of Iowa. They are suing Bitcoin Depot and its subsidiaries for allegedly violating consumer fraud acts. The state claims their ATMs were used by customers for fraudulent schemes, and that the company should have known and done more to protect its customers. This could lead to injunctions and monetary penalties. On top of that, a class action lawsuit was filed in Georgia alleging the company failed to protect customer personal information in a data breach discovered in June 2024. This lawsuit is seeking damages, credit monitoring, and other relief. These legal battles are a big concern and could impact their financial health, even if they are currently showing strong operational improvements. So what is our take on Bitcoin Depot? Looking at the financials, the company is clearly on an upward trajectory. Revenue is growing, and crucially, their profitability margins are expanding significantly. The increase in adjusted gross profit and adjusted EBITDA margin suggests smart operational management and a potentially stronger competitive advantage. Their cash position is also very healthy, giving them flexibility. However, the legal risks are substantial. The Canaccord lawsuit, the Iowa AG case, and the data breach class action lawsuit all represent significant potential liabilities. These aren't just minor issues, they could result in very large financial settlements or judgments, and even operational restrictions. The company states they believe the outcome will not adversely affect their financial condition, but a material adverse effect on results of operations or liquidity in a given quarter or year is possible. The company's strategy of expanding its BTM network and products like BDC checkout seems to be working in terms of revenue growth, but the increasing regulatory scrutiny on crypto kiosks, as mentioned with new state legislation, is a constant cloud. In conclusion, Bitcoin Depot is showing impressive financial growth and improved operational efficiency. They are effectively expanding their market reach. Nevertheless, the looming legal challenges cannot be ignored. Their ability to navigate these legal hurdles while continuing to innovate and grow will be key to their future success. Alright, that is our deep dive into Bitcoin Depot's latest financial report. What do you think about their growth versus these legal risks? Let us know your thoughts in the comments below. If you found this breakdown valuable, hit that like button and subscribe for more corporate dissections, and make sure to join our Discord community for even more discussions. You can find the link in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.